Traders all over the world, welcome back to the PJTrades YouTube channel, and welcome back to the review series where I go over the trades that we take with the premium members, and I come on over to YouTube and I give you guys the sauce completely free. Now, for this relationship to continue, I just ask for 3 simple steps: like, comment, and subscribe to the channel so I can continue to give you guys the free sauce. Because let me tell you, nobody else is doing it like I am on this YouTube channel, breaking down concepts that most people charge thousands of dollars for and give it to you guys here on the channel. So I'm loving the series. I'm loving the feedback, and I'll continue to give you guys all the best breakdowns here on the channel. So today's trade review is going to be from Wednesday, October 22nd, right around 10:20 in the morning. And this trade review is going to be breaking down why we did what we did, where I would say 90% of traders on Wednesday were looking for longs, where I was looking for a short. And I'm going to show you guys why and break it down like we always do here on the channel so you can understand why I'm seeing certain things and maybe something you might have missed completely. So let's get on into it. TurboTax presented by Tostiados, the chip company. So this is the trade setup right here, man. This is what we took, and I'm going to break down why we took it, okay? So if we come in and we look at this market from a 15-minute time frame, okay, we can just delete price right here. We can see that we're in a really nice consolidation box, right? Really no breakout to the upside or downside, just a straight consolidation of about 145 points from top to bottom here, right? So this market is consolidating near all-time highs, and I would totally understand why you want to be bullish here, right? You want to be bullish here because this market is showing really no signs to be bearish, right? We're inside of, we're holding 4-hour fair value gaps. You know, ATH is resting up here. We're respecting higher time frame gaps. Let me delete this, right? We've got a daily bullish fair value gap down here. You're like, why on earth would I want to short into a daily gap? And I get it. I'm not a big fan of shorting into gaps, but the difference is with this gap is there was a lot of resting liquidity inside the gap. And when you have a lot of liquidity inside of a gap and a consolidation that lasts for multiple days, the likelihood of ATH being tagged starts to get less and less and less. Because what the market wants to do here is draw into the lower liquidity before taking the all-time highs, because it needs more orders in the market, right? It needs more orders. Now, from a daily standpoint, that's the stuff you got to pay attention to, is right, the daily fair value gap and the resting liquidity lower. And I'm going to show you the resting liquidity on the 15-minute time frame just to make things a little bit easier. So resting liquidity below us, right? New York AM low, which has not been tagged yet. Boom. Old New York AM low has not been tagged yet. Boom. Sell side liquidity, which is an external liquidity low at 25,043, which is this external low. Boom. And then an old Asia low. Boom. Right? So we've got a lot of liquidity to the downside that the market likely wants to scoop up inside of that daily FVG. Okay, you got to understand that. Just because there's a higher time frame daily fair value gap doesn't mean that the market doesn't want to go down into there, grab orders, balance the gap before going higher. So a lot of retail traders are kind of nervous shorting into that gap, and I get it, right? If there was no liquidity resting down here, we wouldn't be looking for this idea. But then certain factors start to happen in real time, which gives you basically the guidance you need that the market's telling you, hey, shorts are looking really good here. Let me show you what it was. So we're just going to replay time and price, and we're going to get into our area of interest here. Okay, boom. Very, very important leg here. Okay, very important leg. This is what you guys got to look at here. This is literally the make or break part of the session, and I need you guys to understand this because this is going to really be, for a lot of you guys, the aha moment that you might have missed and why you're looking for longs. So let's just delete all this. Midnight opening price is here. We have it marked on the chart always for guidance. I love midnight opening price because it's a lot of the times a great support and or resistance area, as you can see in this example. Now, midnight opening price, and what you really need to pay attention to is the sell side imbalance here comboed with this bullish FEG, which is a BPR gap. Now, it's a double BPR gap, but it's also a triple, right? So this area is super balanced and super strong. You've got fair value gap, fair value gap, fair value gap, triple BPR. Now, I don't have a name for that. Sometimes we make a joke. We call it like a super BPR, which just means that this area is key, right? This is the key to the puzzle on the session right here. And if you don't have the knowledge of this area, you missed it, right? So that's why we're here to break it down and show you guys exactly why we did what we did. So the market comes down, right? It doesn't take the New York AM low, which is clue number one, right? Put that on the board. Clue number one, bing. A little bit sketchy here. Now, if we go over to ES, okay, we could see that ES also leaves its Asia low down here, right? Which is a little sketchy. You don't really see the market leave an overnight high and low like that without making, before taking off and making a big move. So in the back of my head, I'm looking at wrestling liquidity lower on both indices. So it's a little sketchy still, right? Why is that still there? Like I'm starting to play detective here. Why is that still there? We have it marked on the chart, right? We'll come back to it. Now the market starts to bounce out of this external low, which to me, it's not a prominent area, in my opinion, that the market's just going to reverse from and go run ATH from. You know what I mean? We know, that more liquidity is resting here at that New York AM low than this random external 9 p.m. low, right? I believe this is the Asia low, right? So it takes that Asia low, okay? But it leaves the New York PM low. I really would like to see that New York AM low get swept before a possibility of a V-shape and a reversal. Doesn't happen, so we go back to price action reading time. Let's see what happens here. Price pulls away, and it looks really, really good, right? It pulls away, and you're like, oh man, I got to start looking for a long here somewhere. Now, a lot of retail traders, a lot of ICT traders, a lot of traders are looking for longs off this Asia low. I wasn't looking for longs, and there was opportunities to make money on longs here, and it's completely fine, right? Completely fine. You can take a long out of here somewhere. There's definitely going to be an opportunity here, and you would have made money. Okay. What I was interested in doing here today was waiting to see how price was going to react in this zone here inside the BPR. That was my game plan for the session. I told my chat, listen, I'm not too sure about that lower draw being left untagged. There's still a lot of liquidity to the downside here that the market could draw into. We're failing to make new higher highs here. This is what you got to pay attention to. In this channel, right? The market's making new lower lows, right? So we put in a low, lower high, lower low, lower high. I am forecasting a lower low here into this New York AM low at the very least, right? Now, timeout. This is when your eyes need to do the work, right? There's nothing else that we have to do here. We just need to watch this gap, okay? And this really is the piece to the puzzle on Wednesday, October 22nd. Here's what could have happened. If you're looking for longs, what you want to see is an inverted fair value gap on this sell side imbalance to the upside, right? This is a 15-minute gap that we're holding. In order to be bullish here for me, I need an explosion through this with a change in the state through that high, making a new higher high. That's going to be like, boom, let's look for longs. But that doesn't happen. This is when your eyes and your price action reading kick in and everything else goes out the window. You need to watch price's reaction here, right? You need to watch price's reaction here. We're in a 15-minute sell side imbalance and a triple BPR, okay? This is going to be a tough area for bulls to take control in. So we wait for a reaction in the zone. Now, we get into the zone and we start to get like immediate weakness. Immediate weakness. Ready? Watch. Boom. Price absolutely explodes to the downside. Okay? Absolutely explodes. Now, our entry on this trade, I'm going to show you guys. Let me just go back to my book so I give you guys the exact entry that we got. Our entry on this trade doesn't even, I believe it doesn't even happen yet. Okay? Doesn't even happen yet. Market comes in, puts in a very, very aggressive retracement off that BPR. Like an extreme wick candle here, cleaning up that New York AM low in a flash. Okay? Market then recovers. Watch this. Recovers. Okay? But the key level that I'm now looking at again, okay, is going to be this BPR gap. Does it want to come back up here and test it again? It does. Comes up, puts in a manipulation sweep of the high, puts in a bearish SMT, right? We got to be flipping back over to ES. Okay? And we can see there's a massive SMT here. We are nowhere near the swing high on ES. And what I want to draw your attention to is this massive 1 minute gap that starts to tell the story now. Okay? We're now at 9:57, about 30 minutes into the open. And ES is having a real hard time here. It's not flipping that 1 minute gap. It's also got a 5 minute gap wedged in here as well. And both 5 minute and 1 minute bearish gaps are holding price down. Okay? So I'm starting to get the picture on ES. I'm starting to get a representation of what's going to happen here. ES is holding price down. NQ just forms a beautiful bearish SMT. And now I am looking for some sort of trade setup. And I want to watch a reaction out of this zone again. Still, we're not even in a trade yet. We're letting all this wonky stuff play out, this seek and destroy price action, right? Market puts in the SMT, displaces aggressively, okay? Nice aggressive displacement. And then we go ahead and take our entry right here. And I'm going to show you exactly why. I'm going to show you exactly why. On the 15 minute, okay, market puts in a 15-minute inverse fair value gap to the downside. A strong move to the downside. 15-minute inversion gap gets put in here, right? We'll respect the BPR up here. SMT at the highs. Beautiful, beautiful, beautiful. ES is respecting its 5-minute bearish gap down into here. Can't get above it. SMT on ES. Lots of signals are flashing here, right? 15-minute goes inverse. Now, we're finally getting the confirmation we need, but I still need a retest of this inverse now for a trade. Still need a retest. Patience, right? Patience comes in. We're still patient. It's 10:14. No trades have been taken. Market pulls back in. Boom. Market pulls back in. And now we take an entry right here, right? I'm running about a 32 point stop above that swing high right there. And I am targeting everything. I've got external low, New York AM low, sell side low, Asia low. I have liquidity to the downside here, ladies and gentlemen. Lots of it. Okay. And this just absolutely steamrolls to the downside. Steamrolls to the downside. Now, quickly, I don't want you guys to be confused here. I want you to understand this, right? This is the key to the puzzle. If you ignore everything else, this is the key right here. This 15-minute gap never goes inverse. It forms an SMT at the BPR. Okay. We get this very nice manipulative sweep here of these highs. We don't get it on ES. There's your bearish SMT. Okay. Again, back to ES real quick. The 1 minute gap is holding up. The 5 minute gap is holding up. These are your clues. Those are your clues right there, right? Then we get a really nice move off the BPR again. We're holding consequent encroachment of that BPR gap multiple times now. If you look on the 5 minute, we're holding consequent encroachment multiple times. And then we get a really nice change in the state of delivery. Market comes back down into here, bounces, and wait, excuse me, timeout. Market comes down into here, closes a 15-minute inverse. You got to understand that part. Got to understand that. This right here is a 15-minute inverse. You see it? Boom. 15-minute inverse. We simply wait for that candle to close. We're not chasing price just yet. Market bounces back up, tests its inverse. We get a 0 drawdown trade, and we take this all the way down. Now, full disclosure, I took the trade off. I'm going to tell you why I took the trade off. I took the trade off right here, and I probably shouldn't have, but I got a lot out of this trade. I'm going to show you why. Okay. Market puts in a bullish SMT again. And this session, there had been like 3 of them already. And I'm like, you know what? I'm going to take the 40-something, 45 points off. That's plenty of money. You know, I'm running multiple minis. That's a lot of money. So we get a bullish SMT here. As you can see, ES takes the swing low. And NQ fails to take it. And I take a full 45 points off the trade there. Now, a lot of people in the Discord were like, screw it, I'm holding. We run stops to break even. And this thing ends up melting all the way down to every single draw that we had targeted on the session. Literally every draw gets tagged. I believe the Asia low does get tagged eventually. And boom. Every single draw on liquidity gets tagged. Now, we don't have to worry about missing a long trade like that. I never think like that. I always think like, hey, I'm green. I extracted 45 points out of the market. That's a couple $1,000 times multiple accounts. That's plenty of cash. My mind never thinks like that. What I want you guys to focus on here is the setup, right? The setup is the most important thing. And the process getting you there to these setups is what's going to make you money. If you start falling in love to the P&L or the missed opportunities, the missed P&L, you're going to really put yourself in a bad mental state. And I never want you guys to do that, because I did that in my younger careers. Like, oh, I could have got so much more out of this trade. Yeah, I could have, but I know I can do this every single day, and I can find a setup every single day and continue to extract money out of the market for multiple years to come. So great trade, really nice clean draws on liquidity, beautiful SMT at the BPR and midnight opening gap. Holding price down. We spot it. We get into the trade. We let price confirm first on this inverse gap right here, which is the key to the puzzle, guys, really. Once we get that closure, market pulls back up into the inverse. We take a continuation model, and this thing slams for much, much lower. So that is today's trade review, guys. Another beautiful continuation model that I love trading when the market has clean liquidity and is trending in a direction. One of the best models you can trade here on the channel. And yeah, I want you guys to understand the confluences that go into this stuff though, man. SMT, super strong. BPR, super strong. Watching what ES is doing in confluence with NQ, super strong. All of this stuff adds strength to the probability of this being a winning trade. And if you're able to read this stuff in real time, you're going to make money for the long term. So thank you guys again for tuning into the channel. These videos have gone much longer than usual, but honestly, there's so much to go through. I know that things look easy, but they're not, right? There's a lot going on here. And if you can kind of understand why we do what we do, then things over time will start to really open up in your trading career. So thank you guys again for tuning into the channel. I love y'all. Stay safe. I'll see you in the next one.